Welcome back here with Power Lunch. You're on NDTVProfit, and you've got actually a slight deterioration as far as the benchmark indices are concerned. 85.33 on the Nifty 50 right now, down 1.08%, and the Sensex at 27,589, down 1.03% or so. This is not, turning out to be an action-packed day at the Lal Street, more like a really subdued day, which is why we can track all the corporate news flow, and there's enough to keep us busy. I'm very pleased to welcome Lalit Malik, CFO at DaburIndia this afternoon. Dabur is up 1.1% in trade. Thanks very much for joining us this afternoon. Congratulations on your foray into South Africa, and for the benefit of our viewers, I'm going to revisit the news of the day, which is Dabur's subsidiary in South Africa, which is called Dabur South Africa, is in a pact with the CTL Group to buy its personal care, hair care and creams business. The acquisition is for about $1.5 million. So let's talk about that, Mr. Malik. Just in terms of why South Africa? You've started off with a small acquisition, but what could that market yield for Dabur?
Sure. See, currently we are supplying the products from US, Egypt and UAE to South Africa and the neighboring countries in East Africa. The plan is to have the manufacturing base locally, and that's the reason why we have entered into an agreement to acquire the manufacturing base from CTL group of companies, and that will help us to manufacture locally and give us the cost synergies, which will eliminate the exchange fluctuation which currently we are having on account of import, the custom duty, freight, and also the timelines. So that will be a synergy for us in order to manufacture locally and expand the market locally.
Okay, so what kind of demand levels are you already seeing from the South Africa market so far, not taking this new approach into account?
Well, currently the base is very small. However, it is showing potential for growth, and we do expect to have a gradual growth in the South African market, and therefore this synergy will help us to take advantage of the growth opportunities locally.
I know it's unfair to quote an interview that the CEO had given to another media outlet, but he's talking about South Africa yielding maybe $50 million in revenue in the next 5 years. Does that seem reasonably, a reasonable sort of target to go for?
Well, certainly the way we see the opportunities, we can look forward to having a rapid growth in next 4 to 5 years. However, it will all depend upon the overall geopolitical and the market scenarios, but certainly we hope to have a gradual improvement and a growth going forward in next 4 to 5 years.
Okay, with your permission, let's just park South Africa to the side for a moment. And, we haven't had a chance to talk in detail post-earnings, so I'm going to take the opportunity to take stock of Dabur per se, not just Dabur in South Africa. There are many pieces to this. One is the Patanjali factor, and I'll get to that in a moment. But, just the performance in the H1 so far, what signals are you getting for the full year from the first 6 months for Dabur?
Sure. So I think what we saw in the first 6 months in H1 is there have been pressure on the demand scenario, both locally and internationally. However, locally we have seen the profit margins we have been able to manage and in fact grow. Internationally, we have seen certain pressure on the geopolitical scenarios, especially in the countries like Egypt, where we had a translation impact, countries like Turkey and also in Nigeria. However, if you look at H2, we do expect, as far as India is concerned, to have a better H2 than H1, and internationally it will depend upon the geopolitical scenarios and the exchange fluctuations. Overall, we expect the a gradual growth in the top line. However, we do expect margins to be under pressure as we go forward in H2.
Okay, when you say you expect margins to be under pressure in H2, what specific reasons, are you foreseeing for that margin pressure?
See, if we look at last few quarters, there has been an advantage on account of deflationary impact on account of raw materials and the input cost. What we have seen is the gap is getting narrowed down, especially in the raw materials like sugar, gold, etc., where the prices are firming up, and that would reduce the positive impact of deflationary pressures or the advantage on the material cost, and therefore we do expect the margins to have some pressure on that. In addition to that, we will be stepping up our promotional activities, so our efforts would be to maintain the margin percentages, but we do expect, or we do see some pressure on the margins to come as we go forward in H2.
Okay, that's a straightforward assessment by you. You talked about stepping up the promotional activities. What's prompted that, or is it routine? I just want to contextualize whether we're going to see a higher level than normal of promotional activities in H2 or not.
Well, I think we'll see to some extent step up with regard to the promotional activities, primarily on account of seasonal impact also. And we do expect it to continue in Q4 to some extent, but we'll see how the overall scenario on the economic front will pan out. But we compare from H1, we do expect somewhat increase in the promotional activities going forward in next 1 or 2 quarters.
Which, brings me squarely to the Patanjali factor, and I'm sure, sir, you've had to sort of take on this question again and again in recent months, so I'm sure you're prepared for it. But, what is the Patanjali portfolio doing to the Dabur presence, which is deep and wide?
Well, I think if we look at the Ayurvedic concept overall proportion, it's approximately overlap of around 7 to 8% of our total portfolio. And having said that, there is some impact that we have seen in the past few quarters on products like honey, where the decline has been reduced and arrested. So we do expect going forward to have the growth in those categories also. So, and the overall Dabur portfolio, we don't see much impact, though there has been impact in some categories for which we are already taking action, and we are coming back with regard to our market share.
Okay, you acknowledge that honey is one of those categories. Can you talk about where else there's pressure and what your revival strategy is?
Well, I think we always believe providing the value for money to our consumers, and we keep innovating our products to give them enhanced value for their money, at the same time provide the best quality to our consumers. And in that regard, we keep on investing into our R&D, and currently we have seen the Honey Tess Dip Sip as the new innovation. We have seen honey with ginger as the value-added product. We have seen the honey spread as again a value-added product. So those products will keep coming out, which will provide the better value for the consumer and the better health care for the consumer, and at the best value for money that is provided to them. So certainly we will be focusing again more on those innovations and also value for money to our consumers, and with that we'll be able to provide a better experience to them.
And would it be fair to say that, in a sense, you're also refocusing a little bit on Ayurveda, given that it is the starting point, in a sense, for Dabur, and perhaps, you've expanded beyond? So is there some refocusing on Ayurveda again?
Well, Dabur has been into Ayurvedic area for more than 100 years, and going forward we are going to focus on science-based Ayurveda, which is backed up by our research and the best quality, and we'll continue to focus on providing the information and the knowledge to our consumers and upgrading our product values, and continue to provide better qualities into healthcare area and Ayurvedic natural care and herbal area.
So, numbers, they always tell us the, most accurate story. And I just wanted to understand what in a sense represents the FY17 goal for Dabur, a number that sort of captures it. I know I'm treading into guidance territory, but feel free to give me whatever number you feel comfortable sharing.
Well, I think we cannot comment on the future numbers, but what I can certainly say is that our H1 has been subdued with the single-digit top line and near close to double-digit on the top line and at H1 level. Our expectation is to perform better in H2 compared to H1 with regard to the top line and maintain the bottom line. That would be our efforts to go forward, and that would determine our full year FY17.
Lalit Malik, thank you so much for joining us this afternoon. Congratulations on the South Africa foray. It's an interesting one, certainly, and we'll be watching that space with interest, and of course appreciate your patience in taking stock of how the first 6 months of this year have been for Dabur and what the full year could yield. Good talking to you, Lalit Malik, CFO at DaburIndia. We're going to take a very quick break. When we return, from real estate to FMCG, now next up, telecom, and the latest as far as the row between telecom operators on interconnect issues are concerned. Government reassurances also coming through at a telecom summit in the capital. That and more after the break.